Hello, hello, and happy Thursday to all of us. Welcome, community. Welcome to today's Thursday YouTube live stream. As always, we always look forward to these community events that we have on a weekly basis. We are very thrilled having you all here with us today. It's a pleasure having you all here with us today, especially for those that are able to make it. Hope you and yours are having a great week so far. We are very enthusiastic about today's event, and we're looking forward to have it with you today. As you see, the topic already gave it away. Today, we're going to discuss, as I promised on Monday, that we're going to touch in a lot of details on stablecoin, the future of financial ecosystem, question mark. Answer that question today, what we're going to go through in today's session. And before we go any further, I want to welcome everyone that is new in the community. Welcome, feel right at home. It's a pleasure having you here with us. And those that have been around and are always around and consistently showing up, we are thrilled having you here with us as well. And as I'm about to share my screen and get this session going, I encourage us all to ensure that we tweet. The tweets are out for today. Let us all engage with them. Let's all ensure that we put the word out. We bring awareness to our industry, the crypto industry, and also by doing so, we also bring awareness to our ecosystem as well. So with that said, community, I want to thank you all for your comments once more. We're going to go full circle at the end, and we're going to read through every single comment that you posted. Any questions, feedbacks that you have, we'll read every single one of them at the end to keep this interesting and get this going from the very beginning. We'll just get right into today's session, and then we'll come full circle later on to answer, or rather read all your comments and questions. So with that said, community, very thrilled to get going, and bear with me as I'm about to share my screen so we can really get this topic going for today. There's quite a bit to cover, so let's get right to it. If you bear with me, let me share my screen here. All right. And also, community, first of all, let's just briefly touch through the market today. There's really not much to say about it. We've been going up, down, very volatile. As we know, this industry is based on emotions, right? Sentiments, and whatever the sentiment of the day is, either brings fear or greed, and that, according to that, this is what we see here. We're going to have a red day or a green day. Right now, we happen to have a green one. We are picking back up. We actually had dropped down to 65, but now at least we are approaching 68 as far as 68,000 as far as Bitcoin. Ethereum is also back to 2,500. There's really not much to say about this. We just have to deal with the volatility of the market, and that it's based on sentiments and fear and greed and emotions. So we just have to cope with the volatility. And also, just to get this session rolling, I always like to touch on current news or current event. Something that the crypto Twitter is really talking about heavily is this article in regards to what Michael Saylor said, right? Michael Saylor, as we know, is a real Bitcoin maxi, as we all know by now. He literally dedicated his company, using his company as to accumulate more debt and dilute the shares of his company, simply to buy hundreds of millions, actually billions, multiple billions of dollars worth of Bitcoin. And he had this interview the other day, and he said a comment that really in regards to Bitcoin custody. And this drawed obviously a lot of criticism, including from Vitalik Buterin himself, who lays a lot of emphasis on decentralization and really still believes strongly in the whole purpose, the whole idea of what Bitcoin was supposed to be in the first place. So the shocking part is the person who said that comment, because this is supposed to be the biggest Bitcoin maxi, as somebody who really embraces and appreciates the values and the ethos of Bitcoin. So it was shocking coming from an individual such as him to say that Bitcoin custody is supposed to be more centralized. And we're going to just briefly run through this, because as always, we have to set the stage. And this is how we want to set the stage for today's topic, because we're going to build on top of this, right? So let's briefly run through this. Very interesting, right? So just for a summary, like we said, Vitalik, the founder or the co-founder of Ethereum, say that Michael Saylor's comments in regards to regulated Bitcoin custody concerns are being mostly from, and this was him saying, like Michael Saylor was saying, that those who don't want to custody through regulated institutions are paranoid crypto anarchists, right? So that was what he was saying, but we'll get into it in more detail. So Saylor was actually arguing that regulatory capture approach to crypto is good, right? And I want to remind us that let's not be judgmental, right? Let's understand where people are coming from, right? Because this is an individual that obviously has much success. So this is one of the wealthiest individuals in the world, and he became a Bitcoin maxi. And let's understand where he's coming from, right? Let's paint a clearer picture. Let's not just take things for what they are. Let's always verify things and understand, or rather try to understand what he's trying to say here. So anyway, like we said, the Ethereum co-founder Vitalik had some criticism about him, because he didn't like that Michael Saylor was saying that we need to use regulated entities for Bitcoin custody, right? And those who refuse to do so are paranoid crypto anarchists, right? So Saylor was at an interview podcast a few days ago. I'm not sure if it was Tuesday. I'm not sure exactly the date, but it was a couple days ago, like within the last 24, 48 hours. And he described a conversation that debunked myths on Bitcoin. And as usual, he did his usual thing, right? He was explaining why Bitcoin is a superior digital asset, why Bitcoin is a store of value. And he advocated for the recognition as digital money, and that it's essential for human progress. So the usual Michael Saylor speech, right? So, however, as the podcast progressed, the segment on regulated custody was picked, right? The topic on regulation, custody was mentioned, and then the Bitcoin community was heavily criticized him, because he, particularly among self-custody advocates, with some calling him even not a real Bitcoiner. So you can see that the Bitcoin community was calling the Bitcoin Messiah basically not a real Bitcoiner. So he really upset a lot of people, especially coming from him, right? But let's go further. So I'll happily say that I think Michael Saylor's comments, this is Vitalik Buterin, he was also obviously against it, right? And arguing for a regulatory capture approach to protecting crypto. So there is plenty of precedent for how this strategy can fail. And for me, it's not what crypto is all about. And this is exactly now where the road hits the rubber. This is exactly what got people confused, right? Why is the Bitcoin Messiah all of a sudden talking about institutional custody? This is not what crypto is about, right? It's supposed to be something based on self-custody, be your own bank, decentralization. What happened to all of that, right? So this is exactly what caused a lot of confusion and so on and so forth. So now this section right here is really going to paint a clearer picture, right? So the topic says it, holding Bitcoin through regulated entities, right? So Saylor, he advocated holding Bitcoin through regulated entities. Surprise, surprise. Who, like what? BlackRock, Fidelity, JP Morgan, State Street. We can go on. BNY Mellon, Coinbase. We can go on and on and on. And the irony of this is that on Monday, we just had this topic in the community. We just discussed how Bitcoin on its own, despite or even though it has this fast mover advantage and it has this network effect, Bitcoin on its own, it can't really get to its fullest potential. For those who participated on Monday's community event, you all know what I'm talking about. We had this discussion, and it's so ironic that Saylor was trying to tell the Bitcoin community exactly that. He was trying to tell them that, hey, don't get me wrong, I'm all for, custody and self-custody and all of that. That's all great. However, for us to get the best out of Bitcoin, because Bitcoin is not programmed to do all this by itself, we need BlackRock, we need JP Morgan, we need Fidelity, we need State Street, and so on and so forth. That's what he's basically saying, and people are getting it out of context and saying, oh, he's not a real Bitcoiner, why is he doing this and that? Well, this is exactly the topic we had last time. We were basically talking about how Bitcoin has the network effect, has the first move advantage, but just having the network effect on its own is not enough to answer, or rather to address, those 4 challenges that we discussed. So Bitcoin on its own cannot address those 4 challenges. It needs BlackRock, it needs JP Morgan, it needs entities, regulated entities to do that. This was exactly what we talked about on Monday, right? And when he is trying to say this, and of course he was meaning it well, he didn't say he's against self-custody. He was just saying that that's what's required to get the best out of Bitcoin. And we'll see why. Let's continue. So he argued that storing Bitcoin in this way will be safer, right? I'm not sure about safer. Well, it depends. If you're somebody who loses your seed phrases, you might as well just store it with another institution. But what if that institution goes belly up? That's individual. That's on you to decide for yourself. However, another aspect, another argument that he was arguing is that it will dampen the volatility, meaning it will stop all this volatility from happening, right? So his concern is that what he's trying to say is that if we take our Bitcoins, give it to the entities that are regulated that we can trust, such as BlackRock, Fidelity, JP Morgan, and so on and so forth, it's safer. And it also helps us with the volatility because we are removing Bitcoin from circulating supply and giving it away to these institutions to store them for us. Let's read further. And what he's saying is that it reduces risk of loss as well, because governments and lawmakers, they are also they have their investments also in these institutions, right? All the government pension funds, all the retirement pension funds, all the wealth in the world is in the hands of BlackRock, Fidelity, JP Morgan, and he's right. He's absolutely right about this. Sometimes people just need a reality check, and this is what we've been discussing in our community for a while now. And it's just interesting that if Michael Saylor says this, right, an adult is in the room and is talking, and the Bitcoin world is now upset. But they just got a reality check that, hey, if you want to get the best out of Bitcoin, well, guess what? You need BlackRock, you need Fidelity and JP Morgan, you need them. You need to involve them to get the best out of Bitcoin, because it's not coded to do all these things on its own, like we discussed on Monday. You need these entities. That's what he was trying to say. So anyway, his argument was that these lawmakers and governments, they're also using these institutions, and they are unlikely to target these regulated institutions, right? Like they would private entities, which might be more prone to government crackdowns. So that was his argument, right? Like the world is banking with JP Morgan. Everybody's assets is managed by BlackRock or Fidelity. So we might as well use them as well, right? That's his argument. And why is because it will be safer in his eyes. It will help with the volatility. It will reduce losses as well, right? Those are his concerns. Losses, volatility, it's safer, and most important for him is the volatility part of it, right? And we all know that his aim is to get a yield on top of Bitcoin. Now, if we go further here, I just want us to quickly go through this. It was really contradictory at some point here, because at the same time he was talking about how the governments were seizing gold from the citizens and so on and so forth. But actually, what I want us to, the takeaway here is that this right here. He did not dismiss self-custody altogether. Okay, let's make this clear. He did not say self-custody is bad. However, he claimed that the fears stemming from regulated entities were exaggerated, and that such entities provide more stability and security for Bitcoin holders. Those are his words, right? But it's easy for Saylor to say that because what? He was eyeing a $1 trillion valuation. He wants his company to be a $1 trillion company, and also his end game is to become a Bitcoin bank. So of course he has to think like this. Of course he's advocating for institutions, entities to take custody over your Bitcoin, because this is exactly his aim. This is his end game. Is he himself wants to use MicroStrategy, his company, to not just be a $1 trillion company, but also to be a Bitcoin bank. That's the end game, right? That's the end game that he aims to have. So we always have to look at these things that these individuals say in the context of what they're talking about, right? So he's more concerned about the volatility of aspect of it. So besides wanting to be a Bitcoin bank and a $1 trillion company, he's more concerned about the volatility, right? The volatility is a big issue for him. And why is that so important? Why is he mentioning the likes of BlackRock, Fidelity, JP Morgan, State Street? Because of this. He's a big fan of high quality liquid assets. And not just him. Every single company is, or any decent, smart investor wants high quality liquid assets. And what are high quality liquid assets? They are essential component of bank liquidity management, right? And it's not just for the banks. This is just even for the retailers, for you and myself. If you want the type of asset that you want, the ideal asset that everybody wants is a high quality liquid asset. That's exactly what he's trying to say here. And how is Bitcoin, how can we make Bitcoin liquid? Because obviously it's not, right? It's not liquid, not on its own. So this is why we need BlackRock with the ETFs and Fidelity with the ETFs to be liquid. And because BlackRock and Fidelity don't own the assets, which is Bitcoin, they need JP Morgan to purchase the Bitcoin and run the liquidity for Bitcoin, right? Or State Street. Because it's JP Morgan and State Street, they are the two largest APs, authorized participants, because they're the ones purchasing and they're the ones providing liquidity for asset managers like BlackRock and Fidelity so that they can sell their ETFs. Without JP Morgan and State Street, BlackRock and Fidelity can't sell Bitcoin ETFs. And many people don't understand that. you know? So you need the JP Morgan and you need State Street as authorized participants so that BlackRock can sell the paper version of the underlying asset. And this is what the adult is saying, and the kids are upset now, you know? So this is something we need to understand, that it's the reality. It's a hard pill to swallow, but this is finally somebody within the Bitcoin community is actually speaking it loud and telling it how it is, that Bitcoin on its own is not liquid. Don't take my word for it. Let's verify. Let's verify. If you want to look at a liquid asset, you can just use, for example, CoinMarketCap. You can come to CoinMarketCap. Let's go to Tether, for example. First of all, before we do that, let's look at something here. If we just focus on the volume, let's look at this tab right here. The last 24 hours, look at the volume for Bitcoin. It's roughly over 30 billion. Ethereum is almost half of it, like 16.5 billion. If you combine these two together, you can barely hit, you still can't get to 50 billion. And Tether alone, a stablecoin that is extremely liquid, is at 58 billion. So this is just to show you that the more liquid an asset is, it's directly associated with its volume. So the more liquidity an asset, a cryptocurrency has, the more volume it generates. Remember what we just said? You want a high quality liquid asset. This is what everybody wants. This should be everybody's aim, right? To have a high quality liquid asset. And this is exactly what we're talking about here. So if you just look at the volume alone, based on the volume, you can tell which assets are liquid than others. So just by focusing on the volume alone, not on the market cap. Market cap is deceiving. So even though Tether has 10 times less the market cap of Bitcoin, it has almost double the volume of Bitcoin. So you think about that. So now that we've identified the volume tab, let's now look at some ratios. Let's verify things. Let's not just say things. So if you come to CoinMarketCap, you see this volume to market cap ratio. This is a ratio. And what is this ratio good for? It's an indicator of liquidity, right? This number shows you, or this ratio rather, shows you how liquid an asset is. So it's an indicator for liquidity. So the higher the ratio, the more liquid the cryptocurrency is, which should make it easier for it to be bought, sold, right, on an exchange close to its value. So this makes it easier to be traded. So liquidity is important because it can be traded much easier. So obviously Tether is at 48% right now. This just shows you that it's extremely liquid. And you can verify this by its high volume. It really has a high volume of 58 billion. So the more liquid an asset is, the more volume it generates as well. Those two go hand in hand, liquidity and volume, right? So let's not just believe this. Let's verify further. Keep in mind the number 48, right? 48, Tether is 48. Let's look at Ethereum. If you look at Ethereum, again, this indicator is an indicator of liquidity. Keep this in mind. The higher the ratio, the more liquid. So Tether was 48, right? Now Ethereum is 5. This shows you that it's closer to 0 than to 100. And it's literally 10 times less liquid than what Tether is right now. And keep in mind, Tether only holds 20% in cash, but 80% in short-term treasuries. So even that 48 just shows you the liquidity that they have right now on hand, but it's still more liquid than Ethereum. Keep in mind, Ethereum is at least 5%. Let's look at the largest asset in the industry. It's at less than half, 2%, right? So, and this, keep in mind, this is the indicator, right? This is the liquidity indicator. The higher the ratio, the more liquid the cryptocurrency. So don't take my word for it, right? I'm just a messenger. So I'm just saying what is a fact, right? It's not me bad-mouthing Bitcoin. Bitcoin is great, and I really appreciate Bitcoin for bringing this technology to the industry and all of that, but the reality remains it's not liquid, right? And so don't be mad at Michael Saylor when he's telling you that we need regulated entities like BlackRock, Fidelity, and JP Morgan and State Street for Bitcoin to be liquid. He's telling the truth. So some people just can't handle the truth. You know, they rather believe in fairy tales and lies. They don't want to appreciate the truth. They can't handle it. You know, they get emotional, right, and start being mad with Michael Saylor. But he's obviously the adult in the room, and he says something that people don't want to hear. But unfortunately, that's the truth. He's just telling us that for us to get the best out of Bitcoin, we need BlackRock, Fidelity, JP Morgan, and State Street, because they don't have smart contracts to accumulate liquidity. They don't have smart contracts that bring scarcity. They don't have smart contracts for incentives, right? And they're not using their volume efficiently. So if you don't address these 4 challenges based on a smart contract, or it's written in your code, guess what? Of course you need entities. And this was the topic on Monday. So let's not take Michael Saylor's word for it, okay? He says all of this. Let's not believe what he says. Let's cross-reference. Who else is saying this? There's a gentleman known as Ravi Menon. Fine gentleman. He's the managing director of Singapore, right? He's the managing director of the Monetary Authority of Singapore. So that's the equivalent of the SEC in the US, right? So what is he saying? He's actually saying even something even more radical. So he makes what Michael Saylor said very innocent. So there he goes and says cryptocurrencies, not just Bitcoin, the whole industry has failed the test of digital money. So this is a stronger statement. So if people are upset with Michael Saylor, they should be even more upset with Ravi, right? So what else is he saying? He's saying that crypto has performed poorly as a medium of exchange or store of value. This is a very bold statement, community, and most of us already know this article. And I want to point out that this article is 1 year old, okay? It's from November last year. So this is an old article. It's a 1 year old article, and this gentleman was actually saying that crypto has performed poorly as a medium of exchange and a store of value. So isn't this what Michael Saylor is trying to fix here? Basically, this is what Michael Saylor is saying to us, that, hey, we need some support from these regulated entities. We need support from them, right? Because of this. Now let's read even more. Let's read some more. This is very strong statement here. Stablecoins. Now we get into today's topic. Stablecoins, not crypto, will be part of the financial ecosystem in the future. Keep this in mind. This is a bold statement. This is a very bold statement. He's saying that stablecoins, not cryptocurrencies, will be part of the financial ecosystem in the future. And again, why is he saying that crypto performed poorly as a medium of exchange and a store of value? First of all, to be a medium of exchange and a store of value, you need some futures to be there. And one of them is liquidity, like we always say. If your asset is not a high quality liquid asset, if your asset has a 2% as far as volume to market cap, indicating low liquidity, you are not qualified to be a high quality liquid asset. You're not. And this is why you see Tether with 48 is by far the most liquid asset in the entire industry. It is more liquid than the largest cryptocurrency in the industry. And A lot of people don't understand this. A lot of people don't get this. And this is why they're upset with Michael Saylor if he says something like this, right? Because he's talking about, hey, this will help us with the volatility. It will reduce the risk, and we just need regulated entities. We need BlackRock. Bring them in. Bring JP Morgan. We need them. And he's right. He's right, right? So, and this gentleman is saying the same thing. He's saying exactly the same thing. So what else is he saying? What else is he saying? He's saying here that cryptocurrencies have failed the test of digital money. Why? Because they have performed poorly as a medium of exchange and a store of value. What does that mean? Well, their prices are subject to sharp speculative swings, meaning it's volatile. Who else said that? Who else said that? Why does Saylor want to bring in BlackRock, Fidelity, and JP Morgan? Because it will help and dampen the volatility. Isn't this the same thing that Menon is saying? He's saying the prices are subject to sharp speculative swings. He's not saying anything different that Saylor was saying. And keep in mind, this article is one year old, right? 1 year old. So community, this is something that we need to understand here. So, and many investors in cryptocurrencies have suffered significant losses, right? So if you have a very volatile cryptocurrency with low liquidity, that's the issue. If you have a low liquidity asset, it's very volatile and it brings a lot of swings and it can be manipulated fairly easy. So what you want is a high quality liquid asset. And this is what Michael Saylor wants to turn Bitcoin into, using BlackRock, Fidelity, JP Morgan, State Street, New York Bank, Mellon, Coinbase, whatever the case may be. He needs support from these institutions to get the best out of Bitcoin. That's all he's saying. And he has a backing. This individual is also saying cryptocurrencies are not performing well. Actually, they failed to be money, digital money. And stablecoins are the ones that are actually doing the job, getting the job done, and not cryptos, right? And it's stablecoins that will be part of the financial ecosystem of the future. And now we need to ask ourselves, why? What does stablecoins have that other cryptocurrencies don't have? Now, this is our next logical question we should be asking ourselves, because obviously stablecoins, they have something that cryptocurrencies don't have. Now, don't get me wrong, stablecoins are also considered cryptocurrencies, right? But they're in a league on their own. So let's identify, what is it that stablecoins have that other cryptocurrencies don't have? It's something we talk about every day, all the time. It's because they can be considered as medium of exchange and a store of value. To be a medium of exchange or a store of value, you need to have certain futures. And these futures, if you lack them, you can tell by the volume, right? So what does Tether have that Ethereum, more than Ethereum and Bitcoin? We just looked at it. It's liquidity. Don't take my word for it. It's right here. Everybody can verify it. So that's what you need. If you want to stand out as a cryptocurrency, if you want to pass the test of being a digital ecosystem, digital money, and you need to have liquidity. You need to have, because liquidity comes with stability as well. And you need to have some sort of smart contract that helps you to, with the circulating supply, with the total supply management, all of that. You need those mechanisms in place, because if you have those in place in terms of smart contracts, why would you need BlackRock? Why would you need JP Morgan? Why would you need State Street, Fidelity? You won't need them, right? Because now you're truly decentralized and you're using the smart contracts to accumulate the liquidity for you. So one thing that Tether, or rather stablecoins have, such as USDC and Tether, what they have is this right here, highlighted in blue. It's liquidity. They have liquidity. What does liquidity bring? What's the solution for liquidity? First of all, you want a high quality liquid asset. That's what you want. Everybody wants that. Michael Saylor wants that, and this individual wants this for the entire crypto industry, and this is exactly his case that he's arguing. He's saying that cryptocurrencies are failed because they're performing poorly as a store of values and a medium of exchange. Why? Because the prices are too volatile, and many investors have lost a lot due to the volatility, the manipulations that are going on in the industry, and so on and so forth. And this can be addressed simply by having solid liquidity. That alone can solve a lot of problems if you have a high quality liquid asset. And this is exactly what Michael Saylor is trying to tell the Bitcoin industry, the crypto industry, that we need these institutions, we need these ETFs in order to make Bitcoin liquid. But he doesn't understand that by doing so, he's actually taking all the liquidity away, all the power away, and undermining the whole purpose of crypto, right? And that is to enable and empower the retailers, you and me, to have our own custody. This is the dilemma that we are facing right now with Bitcoin, right? To get the best out of it, you need to involve these institutions, because on its own, it just has the first mover advantage and the network effect. But it's not addressing those four challenges. And it's not just Bitcoin, obviously. It's not just Bitcoin. And this is not my word, so I'm just a messenger. It's cryptocurrencies. It's multiple. This is plural. He doesn't say Bitcoin. He's talking about cryptocurrencies have failed. So this is entire industry. Everybody, not just Bitcoin. So if you don't have an ecosystem that is retaining liquidity to be as liquid as a stablecoin and to also attract more volume because you're liquid, then you failed the test, right? So let's move on. Stablecoins, the emerging market story, right? So one thing that we need to highlight here is that so far, the stablecoins, the cryptocurrencies that we've been having in the industry has been strictly limited to crypto use cases, right? You can only use them within the crypto industry. So stablecoins have this breakout success because they're actually finally addressing real world assets, right? They're literally addressing issues or things that are really affecting the global, the real world that we live in. And this is exactly what makes them so special as well. So let's look at some numbers here. So we all know that the metrics are strong and are still climbing. The supply of stablecoins in the aggregate, it's only 170 billion. If you think about it, it's not even that large of an industry. It's still a very small industry. And they settle trillions of dollars worth of value every year. That's a lot. That's even more than Visa. So around 20 million addresses on chain make stablecoin transactions every month. And over 120 million addresses on chain hold stablecoin balances. And these numbers indicate that stablecoins are serious parallel financial infrastructure, having started at near zero just 5 years ago. So think about this. Our current financial system has been around for hundreds of years, right? But we are talking about a stablecoin that only has been around for 5 years. That's it, just 5 years. But because we are having a debt-driven monetary system that is not focusing on liquidity, but is focusing on debt and is over-leveraged, this is why you see how it doesn't grow as much. but it only takes 5 years if you focus on liquidity, and you're already having amazing results, right? And this is what people need to understand, that liquidity, if you don't focus on high quality liquid assets, you are missing out. So let's go further. Let's read some more here. How significant is stablecoin? Now let's understand this. Let's verify some more. Remember how Ravi was saying that crypto has performed poorly as a medium of exchange and a store of value, right? The reason why we always say Bitcoin is because Bitcoin is the largest cryptocurrency, obviously. Its dominance is at almost 58%. So way more than half, market cap wise, is Bitcoin. So if Bitcoin has challenges, problems, that means everybody else has too, right? So let's verify this sentence. He said that crypto has performed poorly as a medium of exchange and a store of value. A store of value. Who said this first? Michael Saylor said this, and people are upset with him. Now Ravi said it. Let's look at the third person who said this. This is a third person who is saying it now, and this is from October 17th, 2024, just 1 week ago. So this is new. This is somebody completely different. Look what they're saying. Stablecoins pegged to the United States dollar have what? Outpaced Bitcoin as what? As a store of value. So this is the third person saying the same thing. But when Michael Saylor said this, everybody's upset. Everybody seems to be upset. I actually said that yesterday, October 23rd. So that was yesterday. So Michael Saylor said that yesterday, depending on where you live in the world. That was yesterday, October 23rd, right? And Ravi said this 1 year ago. Michael Saylor said this yesterday. And Stripe, this is an article from a week ago. And they're all saying exactly the same thing. They're saying that stablecoin pegged to the United States dollars have outpaced what? Bitcoin. As what? Store of value. So how can three very successful, smart individuals in the crypto space that have been so successful and that are admired within the crypto industry are saying the same thing? Why are you upset about it? You know, you have to be able to handle the reality, handle the truth, right? And it's exciting to finally see that people are actually calling things for what they really are, right? So this is exactly what is being said here, right? That stablecoins are outpacing Bitcoin as a store of value in developing countries with runway of inflation. Isn't this supposed to be Bitcoin's job? Don't we say that Bitcoin is supposed to be doing this? Now, I'm not picking on Bitcoin here. I'm just trying to make a point and to really verify that what Michael says and what Ravi says and what Stripe is saying, they're all saying the same thing. So we need to, obviously, they can't all three of them be wrong, right? They're saying the same thing. And we have been saying the same thing also in our community. We've been talking about this all the time. So let's look at some other things here. Let's look at some other things. So actually Stripe, they did this 6 years ago. And then they took a break from providing crypto payments. Why did they take a break? Why did they take a break? So let's look at this. So Stripe announced, like we said, that now they are reactivating crypto payments for US businesses. And what are they doing now? They're allowing businesses to accept what? USDC through the blockchain, Ethereum, Solana, and Polygon. So now they accept USDC stablecoin, right? So This move marks the first time since 2018 that US Stripe customers can process crypto transactions. Now, this is interesting. Following the company's decision to discontinue support for what? Bitcoin. Why? Due to declining demand. People just didn't want to deal with Bitcoin anymore because it's too volatile. It was declining demand. They had to shut down, and they stopped the discontinued support of Bitcoin 6 years ago. But now, what are they coming back with? Stablecoin, right? And what did he say is going to happen? He said that stablecoins, not crypto, will be part of the financial ecosystem of the future. Why? Because right here, because the volatility of it, right? Because their prices are subject to sharp speculative swings. It's too volatile, and just too much losses, right? That means lack of liquidity. It's not a high quality liquid asset. It's not a high quality liquid asset. So let's look at further. So this move marks first time since 2028, like we said, because declining demand, they discontinued Bitcoin, right? So the new future enables US businesses to accept payments in USDC in over 150 countries, with transactions settled in the US dollar. Remember how we say that stablecoins are going to play a major role in helping the US dollar to remain the global reserve currency, and also help the US with their debt crisis, right? So this is very important. Now, this explains again what happened, right? Stripe originally became a pioneer in the crypto payment sector 10 years ago. But when it first offered Bitcoin support, and like we said, they discontinued Bitcoin 4 years later because diminishing demand. And the company halted these services, citing issues such as long confirmation times, right? It takes too long using Bitcoin. The fees are too high. And the price, again, volatility. Why are things volatile? If you don't have enough liquidity, if you're not liquid enough, you're volatile, right? And we verified it. We saw it here. If you don't have enough liquidity, even your volume is not high enough, right? And this is exactly what this says. This is exactly what it means. Let's look at further. So while Stripe aimed to launch USDC payments earlier this summer, delays pushed on the rollout to October. So now they picked stablecoin USDC to support them, right? That's the bottom line. Because it was just the fees were too high, the price was too volatile. The volatility was way too much. Okay, let's look at something else here. JP Morgan debuts in tokenized BlackRock shares as collateral, right? So now it's not only enough for stablecoins, but now JP Morgan, again, this name always comes into play, like Michael Saylor named it also, right? Is one of his favorite institutions is JP Morgan, right? You see, he mentioned it. So what else is JP Morgan doing? So JP Morgan, in partnership with BlackRock, like we discussed before, they want to use BlackRock's shares, ETFs, money market funds, as collateral, right? And we'll see how all these things work together. What has this to do with stablecoin, especially with USDC? It has to do with, because, and we'll get to that, we don't want to go ahead of ourselves. It has to do with the fund, the liquidity fund that BlackRock has. We'll get to that. But first things first, BlackRock said tokenization of money market funds shares as collateral, right? This is something that we need to understand, community. How does this economy works? It works on debts, credit, liquidity, right? So the more collateral you can have, especially if it's tokenized, because if it's tokenized, it's more efficient, right? It's more efficient, like it says here. It will dramatically reduce operational friction in meeting marginal calls. So it's way faster. It's more efficient. So, like we say, JP Morgan, they carried out the first live blockchain-based collateral settlement transaction with BlackRock. So these two are working together with Barclays, and which is a banking giant, and JP Morgan already, they have their Ethereum-based blockchain called Onyx, and they're using that for their tokenized collateral network. So they have a private blockchain on Ethereum, with they, I mean JP Morgan, where they're using their tokenized collateral network. And they use BlackRock's tokenized shares in one of their money market funds. And the tokens were then transferred to Barclays for collateral in over-the-counter derivatives trade. Now, we need to understand this. Over-the-counter is what ETFs are doing right now, right? ETFs are trading over-the-counter. It's not on-chain. And derivatives market is something that happens in the traditional financial world. And if whenever you hear derivatives trading, they're talking about futures trading, options trading. This is what the Bitcoiners are so excited about, that Wall Street has enabled for futures and futures trading and options trading. This is so-called derivatives. Derivatives, in simple terms, just means that you trade based on derived asset. You derive the value from an asset. In this case, it's Bitcoin. So you don't have to trade with real Bitcoin. You can just use options contracts or futures contracts and trade that way. And derivatives market is large. Let's look how large derivatives market is. The derivatives industry is extremely large community. It's extremely large. Let's look how large it is. It says something about 118 trillion. 118 trillion community. This is a large market. So this just shows you why JP Morgan and BlackRock are doing this. Now we understand why Michael Saylor, in relation to Bitcoin's liquidity challenges, why we need BlackRock and Fidelity and JP Morgan, because they're experts in the derivatives market. And derivatives market is sitting at 118 trillion right now, right? That's a lot. That's a lot. And that's just for us to have an idea how large this industry really is, and what JP Morgan and BlackRock are actually aiming to do here with all this tokenization. And another thing also here is that we need to understand one thing. $100 million was also in USDC stablecoin, right? On the Ethereum network. That's what this is all about. So all these tokenizations are based on BlackRock's liquidity fund, and the BULLRUN token obviously is paired with USDC. So this is, in case you're asking yourself, well, Steve, where's the stablecoin connection? It's because all these tokenized assets are being liquidity is being provided by BlackRock's BULLRUN token, which is paired with USDC stablecoin, right? Which is on the Ethereum network as well. So that's just to put the things together. What else is using stablecoin? Guess what? The largest network, payment network, which is Visa, they're the first major payments network to settle transactions in what? In USDC, right? Stablecoin. Now, why are we stressing this so much? It's because we want to verify what this individual said. He said that stablecoins, not cryptocurrencies, will be the part of the financial ecosystem of the future. So we have to verify these things. We can't just take these things for its face value. We have to verify these things. And so far, it seems like he's telling us the truth, right? I mean, even Michael Saylor started to say the truth, and then he got attacked on Twitter right now, right? People don't understand why he's changing, but he's just saying the truth. So anyway, Visa now, the largest payment processor, is also now settling transactions in stablecoins, in USDC in particular, right? Now, this is not news. They've been doing this since March 29th. Like, this is 4.5 years ago. And because we always say that, always follow the money. Whenever you see market leaders do things, they're the fast movers, everybody else will follow what you do. So because Visa is the largest as far as payment processors is concerned, naturally MasterCard followed suit, right? They also were like, okay, let's also jump on board. They came 3 years later. Better later than never, right? It's better to come later than never. So MasterCard also came on board, and they did exactly what Visa did via USDC settlements, right? Always let the money lead the way. So if you see Visa, JP Morgan, BlackRock choosing Ethereum as their blockchain, guess who else is going to choose Ethereum? If they're using USDC, guess who else is going to use USDC? So they're just leading the way, and everybody else will follow where the money goes. And this is why BlackRock launched the Tokenized investment fund. It's an investment fund, which means that it's developed to literally fund all these tokenized assets that are about to be deployed on Ethereum. So this will be the largest fund in the history of mankind. And this largest fund is paired with USDC stablecoin, and it's on the Ethereum blockchain. And the most beautiful thing that we need to understand is about what we still maybe don't understand about this liquidity fund is one thing I want us to really understand here. So BlackRock, the world's largest asset manager, has notified regulators that it will offer a tokenized pooled investment fund. So this is a pooled investment fund, meaning they're pooling liquidity together. Does this sound familiar? Why are they doing that? Because they want a high quality liquid asset. Who doesn't want that? This is, at the end of the day, this is what it's all about. This is what it's all about right here. A high quality liquid asset. Nothing more, nothing less. So this is what they do. And they're pairing it. And they're doing this because they understand one thing. A token called BULLRUN, right, which is the abbreviation for BlackRock USD Institutional Digital Liquidity Fund. They're telling you it's a liquidity fund. And it was created this year on March 5th on the Ethereum blockchain. And this is the sweet part here. Look at the max supply that they have. They have a max supply of 100 tokens. That's it. What does this tell you, community? This tells you that this fund is going to be the most expensive fund, and because it's on the Ethereum blockchain, you're going to see it right here listed right at the #1 spot. And keep in mind, BULLRUN is a token, just like Bitcoin is. It's a cryptocurrency, right? It's a token, just like Ethereum, just like it's a cryptocurrency like every single one of these. There's only 100 of them. What does this tell you? There's only 100. That's it. And it's a max of 100. So this tells you that this fund is going to be the most expensive fund ever. And this is why you need to put down a minimum of 100,000 just to be able to play within this pool. If you can't put down a minimum of 100,000 US dollars, you can't participate in this liquidity fund. You just can't. It's out of the real estate retailers league, right? And what we need to understand here, community, is that stablecoins on the Ethereum network are paired with this large liquidity fund, which there's only 100 of them here. This, and because it's on the Ethereum blockchain, you can verify it on Etherscan, right? It's right here. Max supply, you can verify. That's the beautiful thing about blockchain technology. Max supply, we can verify. Yes, it's true. It's really they only have 100, indeed. And how many holders? Just one holder. So this means it would be fractionalized. There will be fractions, right? So this is exactly what we need to understand here, community. We need to understand this, that we are looking at something that is going to be standing out in the industry. So now that we understand that, let's look at something else. Circle is the issuer of the USDC stablecoin, right? But who actually owns Circle as far as market share? They raised $400 million. And who else? BlackRock, right? They're the ones who invested heavily into Circle. So BlackRock and Fidelity, they're the ones who dabbled into stablecoin, and they were the heavy hitters, and they invested heavily in this 400 million round, right? BlackRock is always there. They're always there. And if BlackRock enters a market, they're not here to just participate. They're here to take over completely. They're here to literally run the world with it. So they're not here to just have a couple hundred Bitcoin. They're here to literally run Bitcoin, run Ethereum. And this is exactly what Michael Saylor is trying to tell us. And people are being upset and they're in their feelings, right? And he's telling you that, hey, I know we're all about kumbaya, we're all about decentralization, and Bitcoin is the great and everything, but in order to get the best out of Bitcoin, we need to get involved with BlackRock, Fidelity, and JP Morgan. Let's not take my word for it. Let's look at this. Did you know BlackRock owns all of these companies? I'm not going to go through all of these. I mean, this is just too much. Like, of course, they don't physically own them by themselves. Their investors are owns these, but they're the ones managing all of these. So all these companies, BlackRock usually is in the top two. They're always in the top two holders of all these major companies in the world, in every sector, be it in pharmaceutical, telecommunication, be it like payments, like Visa, you name it. BlackRock is always on top. They're always in the top two. It's always Vanguard and BlackRock. Those are the two top. Don't take my word for it. Let's verify. You can verify this if you go to finance.yahoo, right? Let's just make an example. And for example, let's go to NASDAQ. Let's verify this. What we just saw here, let's verify. Is that really true, right? It says S&P 500, but let's see. And meanwhile, as this is loading so slowly, you see the largest institutions such as NVIDIA. It's BlackRock that holds the majority. eBay, Amazon, Google, like we said, Apple, Exxon, Microsoft, Walmart. These are extremely large institutions, very large institutions. Okay, let's look up, for example, Tesla. I hope it works. Let's look at Tesla. I don't know why it's so slow today. I really wanted us to look at this, but I'm not going to sit around and wait for it to load up. Let's move on. So another thing that we need to look at here is Circle. Circle is deepening their partnership with BlackRock, right? And BlackRock is the one literally managing Circle's funds, which is the reserves for USDC, the stablecoin, right? They are the ones managing it. It's the Circle Reserve Fund, right? And it's only available to Circle, obviously. And what are they doing? So they're investing in short-term treasury bills, which is US debt, like we say, because they're a stablecoin. They are required by regulators to purchase US debts. As a stablecoin issuer, you're required to do so. So once they purchase these US debts, they have maturities, meaning, and they're investing in short-term treasuries, which is roughly 3 months, right? So they mature within 3 months. So once that happens, the existing treasury holdings mature. Once they mature, what happens? The proceeds will be used to purchase new treasuries by the Circle Reserve Fund. So what are they doing? They keep compounding. You see them, they keep compounding, right? They never take it out. They just keep using the proceeds, and they use to purchase even more, right? So they just keep buying more and more and more and more. And why is that the case? First of all, before we go to the why, let's understand what's happening. The BlackRock, obviously, they're the ones managing the reserves, and the funds are custodied with a very famous bank that we all know about by now. It's the New York Mellon. And they already serve as the custodian for treasuries, right, that comprise the USDC reserves today. So what else can New York Bank Mellon do? Remember the SEC 2 weeks ago gave them green light to be the only crypto custodian, Bitcoin custodian. So this is the largest bank right now, the most trusted bank right now. So, and they're the ones holding reserves for Circle. And BlackRock is the one managing those assets for them. And they're using the proceeds to keep compounding, right? They're using those short-dated US treasuries to just keep compounding more and more, right? And this is something that we need to understand that Circle is doing. And as they're doing so, why are they doing so? Because they plan to become a full reserve national digital currency bank. We've been talking about this, right? So they're really putting the best foot forward by keep compounding their proceeds that they receive and keep building more and more reserves, right? And like we said, only 20% is in real cash. 80% is usually in short duration US treasuries. This is not just for Circle. This is for Tether as well, USDT. But even though there's only 20% in cash and 80% in treasuries, still Tether, with only 20% liquidity, cash, they're still at 47%. They're still extremely liquid, right? If they had everything in cash, this would be showing at 100 right now. But obviously they're generating revenue with the US Treasury bills because not everybody's cashing out at the same time, but they're liquid enough to do so. And this is what sets stablecoins apart, because they're literally backed 100%, right? That's the difference. They're literally backed 100%. And this is what I wanted us to look at, is that this is another point that sets stablecoins apart from other cryptocurrencies. They are extremely liquid, and they are literally backed by a lot of liquidity, one-to-one. They are required to do so by the regulators. And like I say, the aim is to become a full reserve national digital currency bank. And this is why they chose this route, to have their own fund that they're using the proceeds to keep compounding over and over again and building up. The proceeds will be used to purchase new treasuries. That's all they do. They just keep compounding so that they have a full reserve digital bank. And this is what they aim to do. This is what they want to do, right? And they're telling you here that Circle is willing to operate under the supervision of the Federal Reserves, right? The Feds. Who are the Feds? They're the ones who print the money. And the Treasury. And the OCC and the FDIC insurance. They want to operate and work and coordinate with them. Who else is backing Circle? One of the largest banks also, Goldman Sachs. They're backed, right? And this is what they're telling you here. And I just want us to read this. We believe that full reserve banking built on digital currency technology, blockchain technology, can lead to not just a radically more efficient, we're talking about efficiency here, but also a safer, more resilient financial system. And this is Saylor, this is the CEO, the founder, right? He said that. And what he was saying is that USDC is going to grow hundreds of billions of dollars in circulation, right? As they continue to support high trust economic activity to become a popular tool in financial services, etc., etc. Remember how we found out that BlackRock, they're dabbling into derivatives, right? They want to use, they're actually already using, the aim is to use as collateral, right? They want to use, right here. They want to use, they created this fund for collateral, right? To use that collateral and tokenize everything and then use it as collateral. And this is exactly what they're getting ready to do, community. And to do that, they need to pair with USDC, and USDC will also be investing and purchasing all these treasury debts, US debts, to in order to back and support not just a USDC stablecoin, but also the BULLRUN token, because it's also purchasing US debts in order to back all these tokenized assets. And they are also a stablecoin paired with another stablecoin, which is USDC. So now, USDC is the largest regulated stablecoin in the world. It's the largest regulated stablecoin. Unregulated is USDT. It's the largest unregulated, but if you look at regulated stablecoins, USDC is the largest. They have the MiCA license in Europe. They're also putting together regulations. Hopefully it will be rolled out by the end of this year or before the end of this year. And they're heavily regulated. They have BlackRock as their asset manager. They have their own fund. And also, as we see here, let's look at something even further. As stablecoins gain greater traction, what's next for crypto's killer use case, right? What's next? And let's look at this. This is interesting. So, of course, we know that stablecoins are increasingly gaining traction and all of that, with corporations launching their own stablecoins. So discussions, like we said, the highest discussions are being, there's discussions among governments and as far as regulations and so on and so forth. Now that we know that Stripe purchased, or rather acquired Bridge, which is a stablecoin issuer, right? They are also process stablecoins in different ways. They custody them, they issue them, right? And this is what they acquired for 1.1 billion US dollars this week. So analysts argue stablecoins legitimize public blockchains, providing investment opportunities in the form of public companies, an alternative to money market accounts, and value accruing their underlying networks, right? So obviously, without stablecoins, blockchains wouldn't be as liquid as they are today, because not even the largest cryptocurrency is liquid enough on its own, right? It's at 2%. And at least Ethereum has more than double, right? At least Ethereum we saw was at 5%. So if you look at Ethereum, at least Ethereum was sitting at 5%, right? And stablecoin was at what, 48%. So this just shows us that we really need to understand what we're doing here. Finally, Tesla came up. So if we go to holders, we'll come back to it. So yes, with stablecoins now at 177 billion market cap, they have arguably become the most dominant application of crypto technology. So what this individual was saying, he was right. He was saying that stablecoins, not cryptocurrencies, will be part of the financial ecosystem in the future. So now we're coming full circle, and we're reading that obviously they've become the most dominant application in crypto technology. But that's not enough. What's next? You know, what's next? What else is big? What else is going on, right? So stablecoins have undoubtedly found a product fit, generating $5 trillion worth of global transactions in the first half of this year alone. According to analysts of crypto asset managers, Bitwise, that's comparable to Visa's $6.5 trillion. So here you have a 5-year-old company, just 5 years, and it's already rivaling an institution that has been around for decades, and it's almost matching it over the same period. So and further 3.1 trillion generated by stablecoin transactions in the third quarter alone. So it's amazing what stablecoins are doing right now as a killer app. So we always say that crypto is on the brink of finding its killer use case. Well, here it is, right? And it's in the form of stablecoins. And you can see this beautiful chart. It's showing you how much the transactions and so on and so forth. But we're not going to look at that. We're focusing on point out that major corporations like PayPal have now launched their own stablecoins. We know that, right? And Ripple, Revolt, Robinhood also looking to get on the game. They also want to have their own. The technology is being discussed at the highest level of government. And just yesterday, payments giant Stripe, like we said, confirmed its acquisition of the stablecoin API firm Bridge, the largest in crypto history. So this is the largest acquisition in the history of crypto. And Stripe, which is already highly used for payments, online payments, has acquired a stablecoin Bridge right now, right? So Stripe alone, the deal alone for Stripe emphasizes and validates the usage of growth of stablecoins as a legitimate use case for public blockchains now. So this is a use case that goes beyond the borders of blockchain. This is now in the real world as well. So another thing that I want us to understand here is this. Another thing that people are really getting into is this growth in stablecoin creates new demand for what? US debt. How long have we been talking about this? How long have we been discussing how stablecoins are the solution for US debt? And enhancing what else? Liquidity. In what? In the treasury market. What is treasury market? Is the debt market, benefiting the broader financial system, right? So stablecoins are not just a killer app, and they're not just used outside in the real world, but they also are a new demand for US debt, meaning they are required by regulators to purchase US debt. And what does this mean? Of course, this enhances liquidity into the market, meaning that the Feds are now more willing to print even more money into the markets because now they have a high demand for US debt, right? This is exactly what's happening. And now this is where all the tokenizations now come into place. Because now, if you look at stablecoin, they are sitting at 18th. They are now the 18th largest holder of US treasuries, right? And they are even ahead of South Korea, Germany, and so on and so forth. As you can see here in green, this is stablecoins. They are the 18th largest. So they are ahead of South Korea, Mexico, Germany, and so on and so forth. And the industry is only 5 years old. So what about BlackRock's liquidity fund that is paired with USDC? What about Visa, the processing giant that is also settling in USDC stablecoin? What about JP Morgan that is on the Ethereum blockchain and they're using their tokenized assets which are paired with USDC on the Ethereum blockchain, right? And what do you think about all of this? What about Stripe, payment processors? They are launched on USDC as well. They're using USDC as well. They ditched Bitcoin for USDC, the stablecoin. And we can go on with Circle wanting to be a full reserve global digital bank. What does this mean? This means they'll have to purchase even more treasuries, right? So what does this tell us? Issuers take in US dollars. Stablecoin issuers, they take in US dollars and issue an equivalent amount of stablecoin in return. They then use that fiat currency to buy what? Treasuries, which is US debt and other yield-bearing assets, pocketing the interest. As an example, Tether, the largest stablecoin issuer with a circulating supply of 126 billion, made more profit last year than the global asset management giant BlackRock. Does this make sense now? Why BlackRock is so keen on coming up with their own liquidity fund? Why do you think they're coming with their own liquidity fund? It's not because they love Bitcoin and they enjoy the blockchain technologies, because they're like, how can this 5-year-old company make more money than us? And we've been around for 50 years. They have maybe a dozen employees. We have over 3,000 employees or 20,000 employees, right? So this is something that is very lucrative for the issuers. It's very lucrative also for the government as well, because now they have demand, like we saw here, right? They have demand for US debts, demand for US debt. And also all of this at the end of the day is about liquidity, like we said. Everybody wants high quality liquid assets. This is what it's all about. At the end of the day, nothing matters. This is the only thing that matters, high quality liquid asset. And this is what Michael Saylor, we started with this article at the beginning, was trying to tell the Bitcoin world and the crypto world that I know we don't want these individuals. We don't need these entities. That's not what Bitcoin is all about. That's not what the cryptocurrency is all about, the crypto industry. However, in order to be liquid, in order to dampen the volatility, we need to bring BlackRock, Fidelity, JP Morgan. We need to bring these guys on board. And finally, it's here now. Finally. So you see here, this is Tesla, for example. Who are the largest holders? Vanguard, right? And BlackRock. And we can go on and on. You'll always see these two, they're always the largest companies. You'll always see them as the largest companies everywhere you go. No matter which company you pick, it's always Vanguard and BlackRock. So this is true. All these companies, they're always the top two as far as shareholders. And this is what we mean, that when BlackRock comes into the crypto space, they're not here to take second place. They're not here to just participate. They're here to completely take over with this fund right here. And they're telling you here that these are the investment objective is that this BULLRUN, they seek to bring in liquidity and stability. Why do they focus on liquidity and stability? It's because this right here. It's because this right here. It's because right here, cryptocurrencies failed the test of digital money. It's because they perform poorly as a medium of exchange and a store of value. If you want to be a medium of exchange and a store of value, these are the two things that you need. Liquidity, which will bring stability. We always talk about this. You have liquidity, you have stability. So they are literally telling us here that, hey, we have this digital liquidity fund. Why do we have it? Because we need a liquidity and stability. We need that. Once we have that, we can address this challenge that we face, lack of liquidity. And we can then attain something that stablecoins have, right? And once you have liquidity, you dominate in volume as well. And this is exactly the reason why. And this is what Michael Saylor was trying to say. This is what Ravi is saying, right? And this is also what Stripe is saying. They're all saying the same thing. They're saying the same thing. All of them, no matter who, they're saying the same thing. You need to, if you want to succeed in this industry, you need to enhance liquidity. Bottom line, enhance your liquidity, be a high quality liquid asset. And this is the only reason why BlackRock came up with the liquidity fund, so that they can provide liquidity to all these tokenized assets. And they do so by pairing their BULLRUN token, right here. They're pairing their BULLRUN token with USDC stablecoin, and they do that on the Ethereum network. And also, we see how we saw here JP Morgan. They are also on the Ethereum blockchain, and they're using BlackRock's money market funds as collateral, right? Because they still want to maintain this monetary system that is debt-driven, based on credit, right? Liquidity is needed for banks to issue or lend out funds, right? Liquidity. To do that, they need collateral so that they can do that. So it's a win-win now, community. That's the bottom line. The good news is the more stablecoin regulations are here, the more large institutions are using stablecoins, like we say, such as Visa, right? We saw Visa here, MasterCard, BlackRock with their liquidity funds. Circle wants to become a full reserve digital bank. We see Fidelity is involved. We see so many large institutions being part of this. And if we go to holders here, we see the same thing. We'll see the same thing. So all of this is in the hands of liquidity. Now, let's close out with this. Tokenized treasuries, right? This is the game changer now, because now not only are stablecoin issuers required to purchase treasuries, but now they can use their treasuries as collateral as well. Now, how magnificent is this? So you can imagine what this fund is going to be like. This is going to be an amazing fund. They're not only going to be the largest fund, because they only have, like we saw, 100. They're only going to hold 100, right? Max supply is 100 tokens. So they're going to be an extremely expensive fund. It's going to be exclusive. And also, what they're going to do is they're going to use these tokenized treasuries as collateral. So as you're earning yield on your treasury debts, on the debts that you purchase, you can now use it as collateral as well. And this is why regulations will allow banks, such as what Michael Saylor said, JP Morgan, but also asset managers such as BlackRock, Fidelity, they have their own stablecoin, like we saw, BULLRUN, paired with USDC. Now they are purchasing US debt. This US debt, they can now use the US debt as collateral and borrow more money from the banks, JP Morgans, buy more debt from US treasury, from the feds. And this is exactly what was said here, right? So they have now demand. This is what it's all about. At the end of the day is that there's demand for US debt thanks to stablecoins. And this is exactly what makes them the pillar of the infrastructure ecosystem in the industry, right? So now that we understand this, there's one more thing I want us to look at. Why treasuries have long stood as a bedrock in the traditional financial system, serving as collateral across various transactions. This is exactly what they're trying to do here. They're using them as collateral. It's going to be used as collateral. And what I want us to read here, and this is how we're going to close, something very, very interesting. So this capability makes traditional assets more productive within the crypto ecosystem, opening a new pool of capital. Using tokenized treasuries can fundamentally reduce risk, expand liquidity. It's always about liquidity, enhance transparency, and improve returns by earning yield on the collateral. So at the end of the day, these stablecoins serve to bring demand for US debts. And as you're doing so, it also brings market stability and facilitates liquidity, of course. And as they're doing so, they're addressing the challenges that Ravi, that Michael Saylor, that Stripe was talking about, too much volatility, right? So it dampens the volatility, and reduces all the risk, right? And this is exactly the challenge that we're facing in the industry, lack of liquidity and inflation. And this is why BlackRock only has 100. They chose to have only 100 tokens total. That's it. They don't want more than that. And they focus on just having 100. They don't have to deal with inflation. They're addressing the liquidity challenge. And then they're giving out yield in the form of USDC as well. And they're using the volume efficiently by generating so much revenue, and then they're sharing it with the shareholders as well. So they have the ultimate asset here, a high quality liquid asset. Now, if we look at all of this, community, we need to understand one thing. We need to understand one thing. Right here. This is how we're going to close. The Tether, the largest competitor is Circle, like we said. And beginning of the year, January this year, they filed for an IPO. IPO is an initial public offering. They want to go public. Why do they want to go public? Because they want to become a full reserve national digital bank. So they want to go public and then get alliances so that they can become a public company like Visa and PayPal, right? And one thing I want us to look at here and close with this. This is very, very interesting. Imagine with liquid deposits in the US worth approximately 18 trillion US dollars. 18 trillion. We are sitting at a market cap of 2 trillion right now, right? The entire crypto industry is at 2 trillion. But what we're seeing here is that, right here, the liquid deposits of in the US are 18 trillion. And stablecoins only represent just 1% of that market, just 1%. So the question here is, what happens to that relative market share if we see the large-scale approval of interest-bearing stablecoins? or a clear regulatory framework? This is the question. So imagine once there's clear regulations and we see this interest-bearing stablecoins such as BULLRUN, like the ones we just saw. BULLRUN has one like that, right? BlackRock, they are giving you interest, paying you rewards in USDC. They accumulate daily but pay you out every month. So they're asking us here, what do you think once the approval of these interest-bearing stablecoins and clear regulatory framework is in place? Because right now, stablecoin is just 1%. They represent only 1% of that market, and it's an $18 trillion market. So even if it's just 10%, that represents 1.2 trillion, 1.8 trillion. So it doubles. That would be just doubling the entire market cap that we have currently right now. Why am I saying all of this? Is to point out that because we are not just paired with USDC, not only are we paired with USDC, as you can see here, BRL USDC, but we are also issuing USDC stablecoins as distributions. That's another thing, like you can see here. This is our smart contract, right? And we are accumulating USDC and we're giving out USDC stablecoins once the staking rewards is triggered. We're paying out USDC in stablecoins. And USDC is in high demand right now. It's a high quality liquid asset right now that Stripes, JP Morgan, Visa, MasterCard, BlackRock, all of them are heavily invested. As we saw here, that BlackRock is heavily invested in not just BlackRock, Fidelity as well, heavily invested in USDC and Circle. So these are the largest asset managers, the largest payment processors, MasterCard and Visa. They're all into USDC, right? So what does this tell us? It tells us that we being paired with a stablecoin and giving out stablecoin as distributions makes us a very interesting option in the DeFi space, right? And Michael Saylor, talking facts, talking about how they need institutions to get the best out of Bitcoin, because which will render Bitcoin centralized. We have an option that is decentralized here, right? You can be your own bank. You can use your own MetaMask wallet or Trust wallet, whatever DeFi wallet you have, and trade in a decentralized manner. Hold on to your assets however you want to, and you don't have to. Let's go down here. You don't have to worry about liquidity. It's being accumulated. It's being retained, because we understand now the importance of liquidity. And if you have liquidity, guess what comes along with liquidity? Volume, right? And if you have volume and you're using it efficiently, you create a feedback loop that the more volume you have, the more liquidity you generate. The more scarcer you become, that means the more you burn. And then also the USDC distributions, you accumulate even more. All this just by using your volume efficiently. Volume and liquidity go hand in hand. So if we stress and focus so much on liquidity, it's because we want as much volume as possible. And if you have volume, not only are you accumulating more liquidity, but you're also burning more supply, and you're also retaining or accumulating more USDC for the stakers. Why is this so important? Because this right here. Now you have not only a high quality liquid asset, that's not enough, but that high quality liquid asset is also scarce, and it retains or accumulates USDC distributions because the high volume. As you can see here, we started with a max supply of 1 million, right? As you can see here, we started with 1 million in total supply. So not only do you have a high quality liquid asset, but you also have a high quality liquid asset that is scarce. Its supply keeps shrinking. Its total supply keeps shrinking. And not only that, it is the third most staked cryptocurrency in the world right now. Only SUI is it Alta is ahead, and gaming blockchain, one gaming blockchain and Sui are ahead, but we're the third most staked cryptocurrency in the space. So what significance does this have? Not only do you have a high quality liquid asset, but this high quality liquid asset is scarce. And not only is it scarce, but it's also the third most staked cryptocurrency in the industry. And not only does it have all these aspects, but it's using its volume efficiently to accumulate USDC distributions as well. Not only that, if you focus on circulating supply, you realize that out of the 966,000, 718,000 are staked, locked away from circulation without the need of Bank NY Bank Mellon or Fidelity or BlackRock. It does it in a smart contract, right? It's a smart contract, like you see. This is a smart contract. And it has locked away these 722 BULLRUN tokens, as you see here. It's done with smart contract. It's not custodied by BlackRock or Fidelity or JP Morgan. It's a smart contract on the blockchain. That's the difference. And another thing also that is important is that if you look at the total supply of 966, right? And you look at the supply that is removed from circulation, 918, and if you add the liquidity pool of 125, if you add this together, you have roughly 843 in total, right? And if you deduct that from here, you have less than 120 in circulation. So if you have only 120,000 BRL tokens in circulation, which is less than 13%, and the rest is literally locked away from circulation, which is 12, almost let's say 13% plus 74. So this 87%, over 87% of the supply is literally locked away, either locked in a smart contract or is in the liquidity pool. So this shows you that the circulating supply is really low. This is great because now this dampens the volatility. This is exactly what Michael Saylor was talking about. If you have mechanisms like we have, why would you need BlackRock or Fidelity or JP Morgan for custody? We don't need no custody. We have a smart contract that is locking our tokens away right here. You can verify it. We don't need no institutions to do that, to lock our tokens away. We all need is the blockchain technology and a smart contract, and it does that automatically for us. And you still have access to your tokens. Whenever you feel like removing them, you can move them because there are no staking or unstaking fees. There is no lockup period, and you have full control over your tokens. That's what decentralization is all about, right? So let's close out with this, community. We've been going on for too long. The hard truth about today's crypto market. This is are the glory days behind us? That's the question. Now that we've learned about stablecoins, how liquidity is important, self-custody, be your own bank, and how stablecoins play a major role in the future infrastructure of this industry, how important it is to retain liquidity and be an efficient and sustainable ecosystem. Why are those things so important? To answer that question and to appreciate that question, the answer to that question, we need to read this article, right? So this is the hard truth. The question is, can you handle the truth? Can you handle it? Having spent nearly a decade, and this is an article from Binance, they always come up with great articles. So having spent nearly a decade immersed in Bitcoin world, I've witnessed every twist and turn. Now it's time to be brutally honest, right? Unfortunately, a lot of people can't handle the truth. You saw what happened to Michael Saylor when he's being honest, right? People can't handle the truth, but regardless, we're going to talk about this. The state of current crypto market is nothing short of a disaster. It's not easy to admit, but it's crucial we face reality. I've watched too many close friends lose everything, taking on debts, straining their families' lives, and all for what, right? So Bitcoin hasn't been able to outperform Nvidia. BNB gains pale in comparison to Coinbase, and Ethereum, it's even trailing BNB, an absolute mess, right? Where are the compelling narratives that once drew people in? Where's the wave of fresh capital, new players injecting excitement in the markets? We could go on and on, right? A series of desperate attempts to stay afloat while venture capitalists pour millions into projects that drain the market of any real liquidity. This is done by the ETFs, right? ETFs are really draining the liquidity from the market, from the blockchains, right? And the innovation that once defined the industry seems to have died up, leaving nothing but hollow promises. We could go on and on and on, but the bottom line of this is that we're witnessing high valuations, billions siphoned out, and no major price surges to speak of. It's a brutal landscape, and the reality is clear. The golden age of crypto may be behind us. If you're still in the game, buckle up, so on and so forth. You can be so depressed reading this, but the good news is that we don't have to. This is beautiful for us because you only have to worry if you're not having strong fundamentals. If you're not addressing the 4 challenges in the industry, then you have to worry, because after all is said and done, what counts the most are the fundamentals. What are the fundamentals? This right here, high quality liquid asset. This is what counts. Nothing more counts. We see time and time again how large institutions, they're coming here to build liquidity funds on the Ethereum blockchain. All they focus on is liquidity. And we started this session with this article. Cryptocurrencies failed the test. This is plural. This is not Bitcoin. It's cryptocurrencies. All of cryptocurrency failed. Why did we fail? Because we performed poorly as a medium of exchange and a store of value. Why is that the case? We can read right here. Stablecoins pegged to the United States dollar have outpaced Bitcoin as what? Store of value. What does this mean? This means that stablecoins are more liquid than Bitcoin. This is what it's telling us. And we verified it. It's true, right? We've seen here, it's the truth. This is an indicator of liquidity. It's at 47 right now. If you go to Bitcoin, it's at 2, right? So you can verify it. This is an indicator of liquidity. The higher the ratio, the more liquid the cryptocurrency is. It's at 2. So it tells you the truth. It's telling you that if you don't have liquidity, and this is the reason why cryptocurrencies are failing, how can you be a medium of exchange and a store of value if you're not liquid? So why are you upset if Michael Saylor is trying to give you a heads up, telling you that, okay, since it's not in the code for Bitcoin to retain its own liquidity, we need the help of BlackRock and Fidelity? Why are people or some individuals upset? He's telling you the truth. If Bitcoin has all these volume, right, which is 30 billion in volume, what's the point? Is it retaining liquidity with it? Is it banning its supply from it, like Ethereum is at least? Is it collecting incentives for the community? If it's doing none of these, what's the point? What's the point? And this is what Michael Saylor was desperately trying to tell Bitcoiners and the crypto industry, that since Bitcoin can't address these 4 challenges on its own, this is why we need these institutions. That's the bottom line. I'm not defending him. I'm just saying that that's what he's trying to say, and that it's the truth. You can bend it however you want to, but the bottom line remains that it's not just Michael Saylor saying that. Ravi is saying that as well. And then Stripe is saying that as well, that stablecoins, they have outpaced Bitcoin. This is why they stopped in 2018. They halted this service, citing issues such as long confirmation times, high fees, and price volatility. This is why they stopped it, and they launched USDC payments. Why? Because of this. So this is how we're going to close out, community. This is it for today, and I hope the message came across. There was so much to be discussed today, so it took a lot of time, but like I promised, we're going to still go through your comments, and for those that were able to stick with us for this long, you're very much appreciated, and I hope the message came across. Bear with me as I'm sharing my screen here. There we go. So community, let me come back to your comments. And I want to thank you all for sticking with the program. And let me come to your comments. As I'm going through your comments, community, let me just summarize today's topic again. It was about stablecoin. Is it the future of financial ecosystem? We were able to verify it through articles, various articles, through numbers, facts, analysis, and it's clear to see that stablecoins play a major role, not just for the liquidity and stability, but also as a debt facilitator for the US debt crisis. It helps with that as well. It's also good for the Feds because now they have demand for these treasuries. What does this mean to us? This just means that we are about to experience the largest liquidity from stimulating the economy. The economy will be stimulated now with so much liquidity because there's so much demand for treasuries through the tokenizations, stable coins, and all these payment processors such as Visa and MasterCard that are using USDC specifically to facilitate all these transactions. So this is great for us, community, and only those with strong fundamentals are going to benefit. And we are that ecosystem, community. We only focus on fundamentals, and we're here to inform, educate, and inspire us to understand that when everything is said and done, what counts is a high quality liquid asset. And that's what the aim is for everyone, right? And that's the goal, community. So Heavy Metal Chef said, hello everyone. Hello back to you as well, Heavy Metal Chef. My brother Abdullahi says, hi Steve, BULLRUN fam. Today's live stream exploring stable coins potential in crypto payments, DeFi and beyond. Let's buckle up for an informative and engaging discussion. Thank you so much, brother Abdullahi. You're very much appreciated for your inputs, insights, motivation, leadership. Very much appreciated. My brother Theo says, greetings, my great brother Steve, dearest Queen Mama Wino, and my epic BULLRUN family. Thank you, great professor, for continuing to educate, inspire, and empower us all. You are so very much appreciated. Thank you so much, great brother Theo. You're also very much appreciated. Queen Beatrice says, hello, Queen. Hello, Queen Mother. Hello, brother Steve. Hello, community. Let's tune in for another session full of knowledge from our big brother. Thank you so much, Queen Beatrice. You're very much appreciated. It's a pleasure always seeing you in the community. Thank you for your leadership, your consistency as well. Queen Val says, hello family, happy Thursday. Thank you, Mr. Steve, for keeping the community inspired and empowered. We are so lucky to be having sessions to look forward to as a community. Thank you so much for your feedback, Queen Val. Thank you for your insight as well. Very much appreciated. And we thank you also for your commitment, your consistency as well. Brother Marcelo says hi as well. Queen Patricia says, hello family. Thank you, Brother Steve. We are more than privileged to be part of this educational session. Thank you so much for participating, Queen Patricia. You're very much appreciated. I see my brother Peter here as well. Hello everyone. Hello, Brother Steve. Good evening from Nakuru here. Greetings to you, my great brother Peter. Always a pleasure seeing you in the community. You are very much appreciated. Thank you for your commitment, your consistency as well. I see Queen Blessing here. Hello, family. Hello, Mr. Steve. Hello, Queen Mother. I am so excited to be here today. So are we. We are very thrilled and excited having you here with us today. Queen Blessing, thank you for participating. Queen Val has dropped some links to our Telegram groups. So for the new members that have not joined our Telegram groups yet, feel free to do so. Here are the links to BULLRUN. We have links to Survivor as well. And then Killer Whale is here as well. So thank you for dropping the links, Queen Val. Queen Grace says, as always, thanks again, Steve, for your dedication to educating, informing, and inspiring us into crypto industry. Thanks, Mama Wino, as well. You are an inspiration to us always. Thank you so much, Queen Grace. You are very much appreciated as well for your leadership, your consistency. You are very much appreciated. Thank you for always participating in these events. Brother Heavy Metal Chef says, hello, my brother Steve. Hello right back to you as well. I hope you and yours are doing fantastic. Nice seeing you in the community. Queen Aloshi says, hello, BULLRUN family. I feel so blessed to be part of this ecosystem. I am an excited student of Brother Steve. Thanks be to God for the lessons which create a lot of confidence in the crypto world. This is very encouraging to read, Queen Aloshi. Thank you for your feedback. Thank you for your kind words. We are glad that you feel inspired. You feel you being empowered. You feel confident. This is exactly the whole idea. This is the whole idea, is for us all to be more confident, to be informed, educated, and because this is such an emotional and sentiment-driven industry, it's important for us to be informed and educated. This gives us confidence, just like you said, Queen Aloshi. So thank you for your feedback. We are very happy to read this and to know that that's the case. We have Queen Mother Wino herself here. Greetings, queens and kings. The days are getting closer to the long-awaited bull run. Our community is growing, well-educated and informed. We have an amazing and committed community. Very well said, Mom. And this is on point. There's nothing more to add here. Everything has been said right here. Indeed, we've been growing. We are well educated and informed, and we have really an amazing and committed community. And we are getting closer to what we've been awaiting for so long. And our patience is getting us to where we need to get. Well said, Mom. Thank you very much. You are very much appreciated. Queen Patricia says, good evening, family. Good evening, Mr. Steve. Thank you again for showing up always. Stay blessed and protected always. Thank you so much, Queen Patricia. May you also stay blessed and protected. Thank you for your prayers. Thank you for your commitment and showing up all the time. We have Queen Debbie. Greetings, my BULLRUN family. Greetings to you, Mama Wino, and my brother Steve. I'm having to be here once again. It's always a pleasure seeing you here, Queen Debbie. Thank you for your commitment, your consistency as well. Very, very much appreciated. We have Queen Mel says, happy Thursday, community. Greetings, Steve and Queen Mom. Greetings back to you too, Queen Mel. It's always a pleasure seeing you in the community. Thank you very, very much for being part of this session today. Queen Mother Wino says, thanks, Steve, for enlightening us and your commitment to educating and informing us consistently. Very much appreciated. Thank you so much. I can only give it back. We also appreciate your consistency, your commitment, Mom. All the educational sessions you give out on Zoom, and also every Sunday is always such an amazing feedback that I hear. So thank you as well for all that you do for us as well. Queen Senzeni says, greetings, queens. Greetings to you too, Queen Senzeni. Queen Resogo says, hello, family, to our Queen Mom, Mama Wino, and our Dev King Steve, and the BULLRUN ecosystem community. Let's gain knowledge and be empowered, Brother Steve. We can't thank you enough, sir. Thank you to Queen Resogo for always showing up. You never miss any event. You're always here, always participating. Thank you for your feedback, your commitment, your consistency. Very, very much appreciated. We have Queen Pisha. Hello, everyone in the house. Happy to be part of today's teachings. We are very glad to have you here as well with us. Very, very much appreciated, Queen Pisha. We have Queen Gertrude. Good evening, beautiful Queen. So happy to be here. We greet you back as well, Queen. You're very much appreciated as well. We have Queen Esther here. Good evening, everyone. Following keenly. Many thanks, able developers Steve and Mama Wino. Thank you so much, Queen Esther, for being part of this session today. Queen Poloko says, good evening, all. Thank you, Brother Steve, for these educative and informative lessons. God bless you. May you also be blessed. Thank you for your feedback. Thank you for your commitment as well. Queen Esther, yes, I understood what you were saying, Queen Esther. Queen says, hello, everyone. Thanks to Steve. This is cool. Nice to meet you, Queen Cool. Nice to have you in the community as well. Queen Cynthia says, hello, Queen Mama Wino, Brother Steve, and the community. Thank you, Brother Steve, for continuing on educating, informing, and motivating us with the good lessons. May the good God keep on blessing you. Thank you very much for the warm wishes, for the kind words, for the feedbacks. Very much appreciated. May you also be safe and protected as well, Queen Cynthia. Thank you for being so consistent and always being part of these sessions. Very, very much appreciated. We have Queen Nancy here. Hello, Mr. Steve. Thanks for this vital info. Very educative. Thank you as well for your feedbacks. Very, very kind of you. Queen Mother Caroline says, greetings, Steve. Thank you for keeping us informed. You are definitely an asset to this community. So are you and everyone else in the community. Thank you for your kind words. I can only give it back. You also very much appreciated, Queen Mother Caroline, for always being present, encouraging, supportive, for your leadership and consistency. You're very much appreciated. I have my cousin Lincoln. It's a pleasure seeing you, Kaz. Thank you for being part of this session also today. Evening, Brother Steve. I needed this. Thank you, brother. Glad that it helped you. This is what it's all about. We're here to empower each other, to inform, educate, inspire each other. And if that's the case, I'm very pleased to hear this. Thank you for being part of this session today. Queen Gloria says, as we are getting closer and closer to BULLRUN, thanks, Steve, for feeding us with free education. Thank you as well, Queen Gloria, for participating in these events. It's a pleasure having you in these sessions. Queen Val says, let's hit the like button, family. Yes, let's engage with it. Let's ensure that we engage. And even after the session, let's ensure that we put in something that encouraged us, something that we want to share with others, and then just engage with the tweets by liking it. It goes a long way, because the whole purpose is to reach as many people as possible, bring awareness to our industry, educate individuals, introduce them to our ecosystem, and highlight how we are getting that done, right? And this helps us to grow as a community as well. So Queen Marilyn says, hello, Steve. Thank you for always educating us. We really appreciate you. Thank you so much, Queen Marilyn. You're also very, very much appreciated. Queen Lathi says, greetings, BULLRUN family. What an opportunity to sit down and be educated about blockchain. This is mind-blowing in the crypto industry. Thank you so much, Queen Lathi. You are very, very much appreciated. Thank you for your feedback as well and for being part of this session today. Queen Viola says, hello, queens and kings of the BULLRUN family, our queen mom and our dear brother Steve. We really appreciate you. You are also very, very much appreciated, Queen Viola. Very much appreciated. Glad to have you here with us today. Queen Marigi says, hello, Brother Steve and BULLRUN family. Hello right back to you as well. Queen Marigi, thank you for being part of this session today. It's a pleasure having you here with us. Queen Evelyn says, evening, family. Good evening right back to you too, Queen Evelyn. Thank you for being part of this session today as well. And Queen Mangai says, hello, BULLRUN family, and thank you, Mr. Steve and our Queen Mother, for changing our mindset in the crypto world. We are going into this BULLRUN well-focused. Stay blessed. Thank you so much once more, Queen Mangai. You are very much appreciated as well. Thank you for all your feedbacks, your comments. You're being so active and involved. You're very much appreciated. Today has been a very, very long session. For those that stood with it till the end, you're very much appreciated. With this said, I want to wish you all a wonderful, wonderful rest of your week. It's been a pleasure. I'm always thrilled to go through these sessions with all of you. I hope the message came across well. I encourage us to re-listen to this again. Let it sink in, as this goes a long way for us. And what it means for us is that we are going to find this bull cycle is going to be massive. We're going to experience a massive and very liquid bull run, and our ecosystem is well equipped and prepared to go through it, and our community is well informed and well educated to embrace it. So what else can we desire, right? So let's win together, let's work together, let's go through all of this together, community, like we've been doing. With that said, have a wonderful rest of your week. Bye bye, everyone. Until we meet again. See you next time.